Guys, welcome back to another video. So this is part 2 of the part 1 video that I did a few days ago here with IDEX on growing a small account. Now I'm teaching you these kind of stocks because they're some of the cheapest ones that I'm trading. It doesn't mean that you have to trade them yourself. I'm just showing you the strategies that I'm taking. The strategies you can implement on any other stock that you like yourself. I just want to show you that it doesn't really take much money to make some money in the stock market. And I'm giving you an example with something that I'm trading myself. So I'm not saying, hey, you got to go put your money in this stock or nothing like that. I just want to give you guys examples of what I'm doing on my end. Now, originally I bought 100 shares. The average price was $2.40. And I said, I'm going to go for a swing trade, possibly turn it into a covered call. It dropped down in price, so I ended up averaging down. I bought an additional 400 shares of it. Average price right now is $2.18. Now, 100 of those shares are tied up on a contract right now because I did a video yesterday on my other channel and I used this as an example. I got paid $25 for that contract that expires on the 15th. Strike price, $2.50. Now, $25 on a $200 and something investment on 100 shares is not bad at all. Now, this is a stock I've been following. Like I said, I'm okay holding it, collecting this premium. Same thing I'm doing with NEO. See, NEO, I'm right now at $53 and something cents average price. I have 500 shares of it, and I've been collecting premium. It's just kind of been trading sideways. Let me show you NEO real quick before continuing. Now, NEO in the last month, last month, it was at $54 and came down to 38, back up to like 47, back down, back up. So it's kind of like just floating right there right now. And so all this is just free money, collecting premium for simply holding a stock, even if you're down on it. Now that money that you collect in premium, you can use it to either average down or buy other stocks. So it's just nothing but free money, right? Even if I get assigned at the end of the day, I'm looking to make some money, grow the account. Now, it's happened to me before where, hey, it goes up past the strike price, and I've made videos on that as well. Now, but with IDEX here, IDEX is one of the cheapest stocks that I've been trading. I've been following it for quite some time, and it's been doing pretty good so far. However, it's still a penny stock. I don't want to put as much money into it as compared to other stocks. Now, I'm okay with just 500 shares right now. And so I'm going to sell some covered calls on it. That's what I'm going to do today on the 400 shares that I bought. Now, the premium is not as much as yesterday. It's only going to pay around $15, I believe. So that's $60 right there. But you can see that I'm actually down like 70. So collecting $60 in premium, you can see that basically I would be down like $10 at the moment. Now, if it goes to $2.50 and past that, then yes, I would be obligated to sell my shares at $2.50. But remember, we're here to make money, grow the account. I would still make some capital gains. Plus, I would just collect the $50 that I'm about to collect right now. So let me go ahead and send that order in real quick. Get some free money for simply holding a stock. 4 contracts, sell. The bid and the ask is obviously the same thing, so it doesn't really matter on the limit order. There you go. We just made $60 for simply holding a stock, and we're willing to sell it at $2.50. We would make capital gains plus the extra $60 that we collected. And so the plan here is to simply let the options expire. If I get assigned, I get assigned and I make capital gains and some premium. If I don't get assigned, then I made some premium for simply holding a stock. Now, I always like to look at the bright side of things. In this case, I mean, it's just like an ATM machine. In any case with some covered calls, if you're holding a stock and you're down on it or it's trading sideways, then look at it this way. It's just like having your personal ATM machine. You're taking money out of it for simply holding the stock. Now, not all stocks are going to be the same. Some of them are going to be nothing but a downtrend, or some of them are going to be tumbling down, so it doesn't make sense to be writing covered calls if you're going to be down a lot more in capital gains. I look for something stable, something maybe with growth, or something that I believe that's going to have some growth in the future, in the near future, let's say a few months from now or even up to a year from now. Now, this one in the last year, it's gotten higher lows, actually. So I'm okay holding this one for, let's say, another few months or even up to a few weeks, depending whether I get assigned or not, and wait for another opportunity. I like taking the gains on a short-term basis, even though I always speak sometimes in a longer time frame, because I always look at the history as well. And so this is all for today, guys. If you guys have any questions, comments, leave them down below. And until then, I'll see you guys on the next video.